Good day, traders, everyone. Good day, everyone. A special greetings to those who subscribed to this channel and those who recommended this channel to others. I really appreciate that, colleagues. Keep on doing that. Let's not be selfish. Let's keep on spreading this good thing. I hope it is a good thing anyway. So yeah. With that said, today I want to show you how to trade currencies, how to take advantage on currencies. Using the concept that I'm using. So some of you may say it's strictly smart money or strictly ICT, and I use a lot of things to get into a conclusion of taking one trade. Like for example, I'm busy at the moment with my group. We are on this Nasdaq, so we already spotted our point of interest. We have 1, 2, 3, 4, but we are not doing that, and I'm not going there. I just want to show you how to use this method on currency pairs. One of my currency pairs was Eurgbp, the time I trade currencies. And the reason why I loved it is because it paid enough. Like it it paid me well. So I love everything that have a good return. So I will show you this thing on Eurgbp. I thought I'll go with Euro USD. Everyone is doing Euro USD. Just that the Euro GBP, a lot of us seem to be scared of it, but it is a good thing. So please do recommend others do subscribe if you're watching this video for the first time. Please kindly subscribe, like, comment. Let's interact. Let me tell me what you like. Tell me what you don't like. If this information has been shared before, yeah, you have a right to say so. But again, if ever it's for the first time you hear of these things, I'll keep on referring to that Nasdaq because I'm waiting for I'm waiting for a certain pattern to happen there. Then I'll take a trade there. And then I want to show you how to take advantage of higher time frames on trading. Okay, without you watching the news, without you waiting to hear what in London they're doing, what the entire continent of Europe is doing, just using a naked chart as we will start here. So now I'll show you lately things. I think I won't take much of your time. If you can pay attention and listen to what I'm saying, I hope it will help you. So you can apply this method or this strategy in anything that you trade. So it's up to you if you want to do currency pairs or something else. So currently I'm doing V75 and Nasdaq because I found a good broker for Nasdaq. Okay, so now let's start here. We start on a monthly time frame. We start on a monthly time frame. We have to choose 2 points in this time frame where we are, and then the first point is this swing high, right? We need to take the most clear things. We don't have to second guess things. This is the swing high, and then where does this swing high comes from? It comes from this low here. Okay, it comes from this low here. Okay, I'll put it like this. As simple as that. Immediately now, already you saw where Euro GBP have to go, and you already see the reason why it should go there. Then if you don't know, we have a an equal low here, or you can refer to it as a double bottom is fine. We have an equal low here. So whenever we see this, and then you must always know that that thing that you are trading, it will trade below this equal low. All right, so that thing you must know always. So now with this equal low, then there's liquidity resting below this equal low here. So price will have to drop from wherever it is to come and grab this liquidity here. Okay, so now again, if ever price is, if ever the market makers are pushing Eurgbp from where currently is at to trade below this, what is it that they are targeting below this? Why would they push the price below this? What is their security? Right, so what is their point of interest and then their point of rejection? All right, so now you need to check where is the order block below this equal low, right? So by now you know the order block as the last down candle or as the last up candle. However, there are lots and lots of kind of order blocks. We have the breaker block, and then we have a normal order block that you know, and then we have the flip zone OB. So there are a lot of the lot of those things. So you need to understand that if ever there's an order block below this equal low, what kind of an order block is it? Will it be respected? And then if yes, you need to find out what gives you the confirmation and the guarantee that surely it will push back from, it's either from this last down candle or this week, or this last down candle or this week then. Okay. Now with that said, we need to find out where Eurgbp is going on a monthly time frame, and then we will continue from there. Okay. Okay, someone is disturbing me. Okay, all right, good. So now we established our most high point and then the low point from where this high is coming from. All right, so now since this is the low point, this is the high point, and then we have this move on the left here. So what is it that we have to do now? We have to mark this high that was broken. All right. Okay, I will get done with this, guys. Please stay with me. Okay. All right. So now, since we marked this high that gave us this low, and then we have a clear break of market structure here, and then the first kind of an order block that you have to see, that you see here, is a flip zone order block. All right, so where the structure was broken, there have to be an order block, and then if that order block is not yet mitigated, do not remove your markup of that order block. I will repeat that again. If that order block it is not yet mitigated, do not remove that mark for that order block. All right, so we have a flip zone bullish order block, and then we have a base bullish order block. All right, so now we will take this base bullish order block. As you can see here, price came after this happened on the 1st of Feb 2007, but it was mitigated in 2015. So that period, if ever you're trading on a monthly time frame, you had to wait for price to come there. So I hope by now, if ever you're trading this concept, you know why this area here is important and not this and not this. So there's no random move in the market. That's what I always say. There's no random move in the market. Everything happens for a reason. So if ever you're waiting for this equal low to be taken, while you have this base or a base bullish order block here, then you'll be losing a lot of cash. All right. So now after this space bullish order block was mitigated, we see price pushing up, and then now since we have this the highest point, okay, this the lowest point, and then from this highest point we see another low has been formed. All right, so this low did not take out the previous high, the highest point. All right, and then the current price action, is in between the low point that has been currently formed and the highest point. So now the question comes in now, that what is the direction of Eurgbp on a monthly time frame? Then now when we look at this and this, we can say that Eurgbp is in an Asian range, right? By looking at this most high and this newly formed low, is in an Asian range, all right? You know the Asians by now. However, look where this low comes from, the low that mitigated this base bullish order block. This low comes from this high here. Now we mark everything that we see, everything that has value. Now this low comes from this high. Why this high and not this one, all the way down to this higher? Well, because this high broke the structure. It broke the bullish structure. All right, so we have this bullish move, and then it gave us the swing high here, and then after the swing high, what do we see then? We see the bearish move, which is a trend change, and then it broke this bullish move, and then where's that break exactly? To be precise, is here. All right. So this candle is the break of this market structure here. This candle is a break of this market structure. So this low comes from this high there. All right. So now whenever we see this, what do we expect then to happen? We look for everything in the range that broke the structure, and then where is that range? Is this high to this low? Now we forget about this. Now focus on this range after the break and before the mitigation. Yeah, and then so there are some couple of things you have to look out for after the break and between the mitigation of which now, due to time constraints, will pass. I'll not say a lot of things here. So, but one of the things you have to look for, since it was a bearish move, you need to look out for an equal high. Why do you look for an equal high? Because after the mitigation, price will have to go to where the liquidity is. And remember, if ever there's an equal high or equal low, there's always liquidity in that area. So now, again, in the previous video, I think I was doing Euro USD. I did show how to anticipate and equalize. So please do check that video here in this channel. So in this instance, we see this equal high here. in this instance, we see this equal line here. So now, what is the meaning of this? This simply means that we have to buy when price come to retest for the second time. Yeah, we have to buy hard. Why do we buy hard? Because now we have a confirmation that this high surely will be mitigated, 100% sure. So after the liquidity is grabbed there, remember, colleagues, liquidity in the market is the same as you driving into a gas store, and then you fill up your tank, and then whenever you fill up your tank, and then your car will move faster than before, and you have confidence that you will reach a longer distance, so you reach your destination there 100% sure. It's the same thing as liquidity. After liquidity is taken, so now the big boys, the market makers, they don't have a need to come back to this area again. They are going to the direction where the liquidity is taken into. Keep that in mind always. So now after that, we see this high being broken. Now we forget about this range, this previous range, okay? Now we focus on this one that has been broken. Now, okay, I'll do this. Now we focus on the range that broke this high. And then where is that range? Is from this low here, right? Is from this low up until this high, yeah. Okay. So again, in between, you need to check what happened. What do we have before this break? Will the market come down and do something here? So now we look at that, and then by looking at this, as I speak now, I see a lot of confirmations why Eurgbp will still drop. Okay, so one of the things I see, we're gonna have a breaker block here. Definitely sure we're gonna have a breaker block here, and then by now I'm sure that you know what a breaker blocker is. So we will have a breaker blocker here, and then where's the target is this equal low here. As simple as that. Okay, we will have a breaker blocker here, and then we'll have our take profit here. But then where is our entry before this breaker block? Remember, we are still on a monthly time frame, so yeah, we'll work this thing all the way down to H4 or M15 if it needs be. All right, so now we have this high, right? This is the higher high, is the high above the previous high. And then now again we have a new high. All right, so we have a liquidity grab above this high. This is a liquidity grab. This is not a break of market structure. This is a liquidity grab. However, where does this high come from? It comes from this low here. All right, it comes from this low here. Okay, so this low, it gave us what? A liquidity grab. This is not a break of market structure. This is not a break of market structure. And then after this stop hunt, and then price was pushed down to the very same spot where it started. Now we move this to here. Now what do we have? An equal high, an exactly good equal high. So now with that equal high, price then dropped. After it formed this equal high or the double top, it dropped to form another equal low or the double bottom. Then from the double bottom or equal low, we see another liquidity grab above this equalizer. So now this proves what I just said down here. All right, that whenever we see an area of liquidity, price will go and grab that liquidity, then change direction or continue in that direction. So now we see price grab liquidity here, and then it was aggressively bullish. However, here price grabbed liquidity and then it reversed. And then now you might ask yourself, why did this happen? Why not the same thing as here? Well, that's clear. It's simply because another equal low was formed there. So price have to come in. You see this week here, it's a liquidity grab on its own, right? So now we need to find an area where that will push for the formation of this breakup block here. And then again, price must come and take liquidity below this here. All right, so now when price come to take the liquidity below this, where is the stop? Where is the point of interest? Well, this is the break of my market structure here, right? This is the break of market structure. This is the flip zone here. So we see now this equal low, this equal low here is exactly at the week close of this structure. All right, but then where will price go? Will price come to respect this area for the third time here? Well, let's look then at the base bullish order block. Where's that base bullish order block? Now this here, this here. So now this would be our take profit. Okay, so this would be our take profit here. Let's mark it exactly. Let's mark it exactly where it is. We I don't want us to do things I don't want us to put the markups in areas where it looks like. I want us to mark exactly where we anticipate price to get to. So we anticipate Eurgbp to drop to this area, 0.63813. Please keep that in mind if you will take this setup into consideration. All right. So now we have this low, then we have this high, and then we have this liquidity grab. Yeah. Then what does that mean then? Does it mean I almost said Nasdaq. Does it mean that the Eurgbp will push up or Eurgbp will drop? Well, this is what I expect. This is my expectation. I'm not a market maker to make that declaration. This is what I expect. I expect a break below this. And then where is that area that will push that will push for the break of this year? Well, as it is now, I'm looking at this base bearish order block. I'm looking at this area, at this zone. So now what do I expect? Now I'm expecting this, then this, and then this, then this, right? On a monthly time frame, okay? That's what I'm expecting on a monthly time frame. So now this is our point of interest. do the different color so that when you get to those areas, it will be visible. So now expect the touch here and here. All right, so now we will go to a lower time frame. Now that was monthly time frame. Okay, so now let's go to a weekly time frame. So then on weekly time frame, immediately I see an area where we expect a retest at before the break, and then this is that point of interest. Now this is that point of interest. Let it have another color. Now this big zone is for monthly time frame. This is our order block on a monthly time frame. So now we will remove it there. It will only be applicable to monthly time frame. Now this is for a weekly time frame. Okay, so this is our order block here, and then that's simply because we have a break of market structure here, a clear break of market structure here, and then again we have everything that will give an appetite, inverted commas, an appetite for the market to come and mitigate here. And then one of those things is this failure of market structure here. So this on its own will give an appetite to the market to come and mitigate this zone here, and many other things here. So one of the things again with this trend line liquidity here, all right, like this, right? So there's liquidity resting above this trend line, which will need to be taken out. All right, so on weekly time frame already we see the break of market structure. In which direction? In a bearish direction. And how do you trade? You always trade into a direction where the structure was broken into. As simple as that. So now we expect a push up to mitigate here, and then push down again. But since we expect a push up, where exactly are we expecting that push up? Well, it's like this. Now after this change of character was formed there, I will mention some lot of things, colleagues. I hope you will understand them, and then some of the terms you now understand them, and then some of the things you now know them. So this liquidity grab, and then what do we have up here? We have a change of character here, and a clear one, all right? This is the change of character here. This is a low, this is a high, this is a low or low that grab the liquidity below this low, and then this is a break. This is not a break, this is just a liquidity grab, but this is a break of this previous high. So what oops, sorry about that. Then what is that? This is a change of character. And then where do we take our entry in a change of character? We look all the places where the market will have to come to, and then we'll take our trade from there. This is a bullish change of character. Then we look for a bullish order block, and then already again I see one now here. These things, if you do them daily, they become a habit, and then you can't let go of a habit. So it's something that you easily see. You don't have to scratch your head. So now this is a bullish order block of this whole bullish change of character. So now, as you can see, the mitigation already happened. So now the current candle is the bullish candle, right? So now we expect the bullish move from here all the way up here. So we are on weekly. Then when we go to daily time frame, and then now this is what we have on daily time frame. Now, where exactly was that bullish order block in a daily time frame? Because we determined that on weekly time frame, and then on a daily time frame, this is where the order block is. Different color as well. So now this is a bullish order block on weekly time frame. So now we'll remove it. It will be visible only on weekly time frame. So now this is a bullish order block. So now this is the whole change of character from this low to this high, from to this lower low, up until the break here. All right. So now things are becoming more and more bigger. All right. So now again, we understand why we have this weak rejection here. So if you don't understand it, I'll help you quickly with a break of market structure here. All right, we have a break of market structure and the flip zone or order block right here, right? And the flip zone right here. So if ever you were trading this pair on a daily time frame, so this was supposed to be your entry and the stop loss just below here. All right, so this was the first entry all the way up, and then this was the second entry. So price is pushing up. All right, so now we determine now that let's go back just for a recap. On monthly, we have the liquidity grab or a stop hunt, and then we anticipate a breakup block here, and then we anticipate again to have another breakup block here. All right. So again, one of the things that will attract the market to come down here is this candle here. This candle on its own, it's important. We need to look out for that candle. It will also attract the market to come down to this area here. Oh, okay. So we found on that we have a stop hunt in a bearish direction, and then on weekly time frame we already have the break of market structure in a bearish direction, which confirms that price will be bearish. However, it have to push up first. Why does it have to push up first? Because of trend line liquidity and everything in between the start from the start in between where the trend line starts and this bearish base order block and the fail of market structure. All those three things, they attract the price to come up here. Then on daily time frame, then now establish that surely price reacted in a bullish order block. Now I can end this video here. I've said everything that you need to take a trade, but however, let me be generous, and then let's come now to this area here. This on weekly is our order block. So now let's fix again here the fail of market structure here. This is the break, and then this here is an order block on weekly time frame. However, on daily time frame now, then it keeps on getting smaller and smaller for the better risk to reward ratio. So now my favorite color, gray. Yeah. So now we will remove this rectangle. This is for daily time frame only. Oh, oops, no, for weekly time frame only. All right, so now this is our point of interest. right, on daily time frame. And then again, we just found out that we have a new now break of market structure here. All right. So this is our point of interest on daily time frame. So expect a push from down there all the way up to here. Yeah, I put it exactly where it should be. So this is what we expect now on daily time frame. Since this bullish order block was mitigated, we expect the push all the way up there, and then after that, Eurgbp might significantly drop all the way down there. All right, so that is what I'm expecting, not what will happen. Please keep that in mind. And then let's look then on daily time frame. What is that thing that will push the market high? Okay. Now, after the break of market structure, yeah, we have an internal structure, right, that has been mitigated. So this is a macro structure, this is an internal structure. However, there's another internal structure that plays an important role to push the market all the way down. And then if you're wondering where's that, this here, it's an internal structure here. This is an internal structure. And then with this order block, it is very important. We see a break here and then a retest to that order block. But what did that retest give us? This retest gave us an equal high. So what does that mean? It means that there's liquidity resting above here. All right, there's liquidity resting above here. So the push that we're expecting from all the way down there might be attracted to the liquidity that's resting here. Then where's the next stop? This area here, this gray zone here. As simple as that. Now we found out where what will attract the market to where it's going, but what will push it to where we currently are? Well, on daily time frame, it's only this order block here. All right. So now let's go to H4, our last time frame. So now we understand why we have this here as an order block, right? So now on daily, again, we understand why we have this as an order block, right? So now there's something I wanted to show you there on daily time frame of which you might think it is not important. When we look at it now like this, it is not important, but we will understand it much better on H4. It is very important, trust me. You see, this is the bullish order block, this rectangle, this is open, this is the close of this last bearish candle. But again, we have this wick here down. We have this wick below this rectangle. Then when you see something like this after you marked your rectangle, let me give you a hint. Quickly go to a lower time frame. And then on a lower time frame, you will find the reasons why we have this wick. This it is a stop hand on daily, but on H4 it is definitely not a stop hand. On H4 this wick respected, it mitigated this candle. Yeah, it is a very important candle, this one. All right, this was a second retest. In fact, it was a first retest after this break of market structure. So on low time frame, Now everything gets smaller and smaller and smaller, but the profit gets bigger and bigger. So now this is a clean break, but price had to come down to this candle, the qualities of order block. Now we see why we have this here. So the qualities of order block is in the previous video again. Please do check that. And then again, we see why this week's came a little bit down. It looks like they dropped a little bit compared to the previous time frame. So why is it like that? This will be visible on daily. All right. So we have a macro structure and a micro structure. And then the flip zone in the macro structure also have the same function in the microstructure. And then where is that flip zone? It's here. Put it exactly where it should be. Exactly, yeah. So this is the flip zone of an internal structure. So it plays the same function as a flip zone in the macro structure. Hence we have the retest there. Then price pushed up. Then now we need to find an area that will push the price up. We still need to find that by now. Well, we have this swing high point here. And then we have a break of market structure here. Right. And then we have this break of market structure. This is a liquidity grab of this previous structure. Right. This is a liquidity grab of this structure. And then this structure, where did it start? It started all the way down here. And then you might be confused. Maybe why do I say they started there and not here or here or here or even down here? This move here broke this structure. So this whole move, its lowest point is here, right? Its lowest point is here, and then this is the highest point here. All right. So this move broke this structure, and then this structure that is broken here, where did it start? It started all the way down here. All right. It started all the way down here. Then where it started, did it break any structure? Of course it did. So now this might get a little bit complicated, but it is not complicated at all. So now this is the break of market structure here. This high, low, and then higher high. Then this is the break of market structure. Hence we see this candle. Now you understand why we have this week down here and this week down here. So now trading with the trend using another block, it's one of the videos that I made there. It's titled exactly that, trading with the trend using order block. Please check for it here on the channel. You'll understand these things. So now, since we have the liquidity grab here, what do we then expect? We expect again to have a bullish breaker block here. We expect a bullish breaker block down up here. I mean, we expect a bullish breaker block up here. We already see that this candle that gave us a stop hand has already been mitigated here, and beautifully so, beautifully so. So this high that mitigated this top hand. Where did it come? Where did it start? It started all the way down here. And then it started all the way down here, and then it broke this structure here with this candle. Another confirmation that will have a break of market structure is see this triple top or equal high. Yeah. Then this candle broke and took all the liquidity that was resting here. So what do we have? A flip zone order block exactly here. But still, we have to keep in mind, we have to look at this candle. It's one of the important candles that will attract the price to drop. This candle will attract the price to drop to it and then pushes up. Then when it pushes up, now we are on H4, then you can start to take your trade. We expect this drop, and then after that we expect something like this. And then where exactly do we expect a retest? Okay, we'll get to that. We'll get to that very soon. So expect the mitigation to this candle, and then price move up, and then make a retest, because definitely sure this will be a bullish breakout block, and then it pushes up. That is what we expect on H4. So now I gave you where the entry will be. Just for the sake of clarity, let me put a horizontal line so you'll see exactly. So this will be your entry, and then a stop loss will be just below this. Then this will be a take profit one. However, just to minimize everything again, on M15, on M15, is this where we expect an entry? Oh yes, this is where we expect an entry. And then on M15, this is where exactly we expect an entry at. So this will be for H4. So we expect an entry here. So now we keep on dropping these points, and the stop loss just below 0.84368, and the stop loss just below 0.84325. That's where we expect an entry for buy on Eurgbp. So expect a drop to this, and then buy from there. And then what then will fuel the price to go up there? Because before you take a trade, it's either buy or sell. You need to check. You need to look at those things. What will push the price to come to a point of interest? If there's nothing, if you don't see anything, then it means your analysis, you might have to reanalyze your chart. Okay, so now we see here, this is what I'm looking at. We're expecting again a breakup block down here. We're expecting a breakup block down here. It should be exactly, yeah. We're expecting a breakup block again down here. All right. We're expecting a breakup block at let me put 0.84846. We're expecting to see a break below this, and then in fact this is not the expected break. We expect a bearish break, so it's 0.84795. We expect a break below this, and then after that break, expect a retest, and then it will drop again. So in the meantime, I see that Eurgbp is moving. So the very same things we marked on, I think, is weekly or monthly, they're happening again here. This is the fail of market structure, and then this is now the break of market structure, right? So where's the entry? This is the entry for a sell on M15. This is a sell entry on M15, right? This is a sell entry on M15. I keep on looking at my Nasdaq, because as I said, that we're expecting something to happen, but it did not happen yet. So yeah, we're expecting an entry here. So any reversal from here, this is the stop, and then where is that? Exactly 0.85046, and then with your stop loss just above 0.85103. And then if ever you are a scalper, you want to time your entry, you want to have the slowest, like the most tight stop loss, then you can do this, and then minimize your entry point. Then this would be your entry point. Yeah, 0.85068. So this would be the entry. Again, we have an internal structure here, which has already been, the order block at the flip zone of the structure has already been mitigated. Okay, and then that's M5, and then M1. If there is any chance on that M1, okay, I see that thing has been mitigated already. So now on M1 we can only look for those for those confirmations that would push the price high. So here we don't have an equal high. Then here we don't have an equal high. I don't like to force things. If it is not working, then it is not working at all. However, I'm expecting some equal high here before it breaks to this area. So just a recap again, we started all the way on monthly time frame, and we came to weekly time frame, and then we found all those areas of interest, but this is the most important one, right? This is the most important one on M15. This is the entry here, all right? So that's it, colleagues. For those who subscribed and for those watching one of my works for the first time, please feel free to comment, say anything in the comment section below. The comments section is for everyone. I take everything. I take the kind words, and sometimes I've been told some things which is not good to hear. But anyway, we are not the same, so we interpret things in a different way. But for those who subscribed, again, thank you so much. Keep on subscribe, keep on telling others to subscribe, like, and comment on the channel. Let's grow this family. This is from me to you. I'm giving you all these things, and then to know about my services, my personal Telegram link will be in the description below. Colleagues, please note that that link does not take you to my mentorship channel. It takes you to my personal Telegram. My personal Telegram will be talking to me direct there. When you go to that link, it does not take you to the group, but it connect you with me direct. So everything will be discussed there. But this is what I wanted to show you today, and thank you so much for your time and for your patience. And I hope this video, it is not that long for nothing. I hope you gain some things. And notice how I didn't mention any news of any country. I just look at the chart as naked as it is. So yeah, our Nasdaq is currently not playing where we want it, but we'll just be patient with that. So yeah, with that said, please keep on subscribing, keep on sharing this information, I mean, and then please do tell others to subscribe to this channel, and then I will really appreciate that. Thank you so much for your time. Yeah, Njabulo right here, and then I'm out.